Welcome to our Quick Fire Friday podcast. This is the Grow a Small Business Podcast Friday series, designed for people who need big insights in little time. In just 20 minutes each week, with no fluff, just real, proven tactics from people who know their stuff. With your hosts, Mick, AJ, and me, Rob Cameron.
Carla, thanks so much for making the time to catch up today. As we were just saying, I think this will be really relevant for small business owners because the concept of fractional executives is really powerful when used well. But let's start off. Let me ask you to give us an introduction into who you are and how you explain what it is that you do.
Yeah, thanks for having me. I'm excited to share a lot of the knowledge we use with our clients to improve their finances. I'm Carla Titus. I'm the founder and CEO of Wealth and Worth Within. We're a fractional CFO firm, and a lot of clients ask, "What is that? What's a fractional CFO, and why fractional, and what CFO, anyways?" So the way I explain it is a chief financial officer. So big companies have this as one of the roles, key roles, alongside the chief executive officer. And what we've done is we've taken a lot of that corporate way the finances are done and brought in and adapted it for a small business to benefit from the same type of planning and strategic direction setting that big Fortune 500 companies have access to. Now, this tends to be really expensive because CFOs are not cheap because they bring a lot of value, right? And they're creating value from nothing. They're growing revenue, they're growing bottom line profitability. They're ideally also growing the owner's compensation in helping them plan financially better for their business. So in doing that, you're increasing the value of your company by partnering with a CFO. And we do it in a fractional way because you do not need a full-time CFO for your business. It's probably, 20 or 30 employees. And you're like, how can I afford to hire a CFO? Well, now you can because we are able to support multiple clients and be in your business what might feel to you full-time, but you don't have to compensate us in that way in order to be able to still get access to the same support.
Yeah. Yeah. And look, I think that's a really compelling way to put it. So it's a lot of the value, but not necessarily for all of the cost. And like you say, the CFO role, Chief Financial Officer, can be really pivotal, particularly at certain points of growth where that financial nous and linking operations with finance can be so important. So tell me, who are the typical clients that you find yourself working with? And perhaps more importantly, why are they coming to you for help? What is there typical pain points, or is every client coming to you for a different reason?
Also, I say clients are coming to us, and the typical size of client, has been in business 2, 3 years. They have, 10 plus employees. They're growing. They don't feel like they can control the finances of the business anymore. They might have gotten this far. They feel like it's just a lot. It's a lot more complex than it used to be. And there's just a lot of moving pieces to manage. They feel they don't have the time to do it or dedicate and put the attention necessary to be able to make good decisions. And they're maybe at times not even looking at the data because they don't have time. They have so much going on. They don't have enough people. They're trying to hire all the help because they're growing fast. And this is just escaping either their skill set or their knowledge or their expertise. And they know even if they have the expertise, they might not have the time to do it. And so they come to us at various points. One of them could be a pain point. Maybe they're tight on cash. They're like, we've grown fast, but we are running out of money. Or maybe they didn't financially plan ahead for any of this growth and they're just trying to catch up and catch their breath as they're growing. Maybe they are struggling with their margins and profitability. They are like, hey, I'm making all this money, I'm growing, but I am not seeing the bank account grow at the same rate. And so they're like, what is going on? Someone please help me understand what is happening. And sometimes they're coming to us because they're actually doing financially really well. They're profitable and they were not sure what to do with the money they have left, how to reinvest it back, how to allocate correctly. They're also second guessing their decisions because they're just, wondering, am I doing everything right? I mean, it feels like it, but can you tell me for sure? So they want some validation and support as well.
Yeah. Great problem to have, but still a problem. And, a good CFO can really, I guess, turbocharge a business that's in that position. So fantastic. So when clients come to you, is there a typical starting point when the CFO engages with a new client, or is it a case that every business is going to have different needs? And look, at a guess, I can imagine you must see some similar problems across the businesses that you engage with.
Yeah, definitely. So we tend to start with financial setting, goal setting, or projections because most business owners can produce those for us. We will ask, we're like, where are your projections? Where is your plan or your budget for this year? And they're like, our what? And that's when we're like, okay, we will close that gap right away. Because if we don't know what we're trying to achieve, how are we going to achieve it? So crafting the plan to understand what are we trying to get to. Also bringing our fresh perspective. We're coming into a business with our own experience as a CFO, looking at other businesses, other industries, and we might be asking questions that they have never asked about their business before. And then they have to take a moment to think, oh, I'm not sure what the answer is. Let me get back to you. And they're going to go think about it. So, part of creating that plan and financially start to outline goals is going to help them get that clarity on, like, okay, here's the plan, here's the numbers. What are the 10 things we need to do to make sure we achieve them? Because, like you said, we have to marry finance with execution and the operational side of the business. Otherwise, those goals will never come true. And we do that really well as a CFO, holding accountability once we create the plan. But that is not the only thing we do. We just sometimes tend to start there because that's the easier, path. Sometimes we have to start with cash flow if there's issues on the cash side. Sometimes we have to start with understanding margins. Things might be not working well. We're overpaying people. People are underworking, whatever the problems are. Or maybe you price your products the wrong way. And that's okay. We can fix that over time. Maybe it's not having enough profit in the business. So we need to figure out what's happening and why. And this planning just goes a long way in helping understand the comprehensive view of the finances so we can then go down to the root cause of the issue and solve that.
Yeah. Yeah. No, that makes a lot of sense. I guess, one of the areas we tend to help our clients is when they're looking for funding. And a couple of the issues we tend to see, and I must say, most of our clients are not engaging with fractional CFOs, unfortunately. And arguably, they may not need our help as much if they did. But one of the issues is not having a good set of books in place. So, their numbers aren't clean. So it's hard to get a starting point as to where we actually at in terms of profitability and how much capacity has the balance sheet got to invest. Budgeting and forecasting is often, either not there or not done terribly well. And I guess importantly, and it probably comes back to that link between finance and execution, but a bit of a model explaining how this business actually makes money, we find really useful when it comes to accessing finance. So sort of talking about, I guess, the operational inputs and, whether that's, your team members and how many dollars they can generate, or particular sort of aspects of your operations and how dialing that up or down can impact on profitability. In my mind, they're all areas where a fractional CFO can add a lot of value. Um, do you have sort of standard tools and templates you can bring into play to help your clients, or do you find you have to do a lot of bespoke work in that regard?
So we do have standardized, worksheets that we use that get us to have a good framework to get started with when we're having a conversation with a client about what their projections are going to look like or how we're going to model that. There's definitely an aspect of customizing for the needs of the industry that is very specific to their needs that we will make sure to bring to the conversation as well. As you know, every industry has, certain benchmarks on margins, profitability, and while you might want to be better than the benchmark, which is, at times possible. For the most part, we know what those are and can kind of help guide. We also understand business models. So that's the other piece that a CFO can bring to, startup or someone who's seeking funding, maybe a more established business that still wants to grow by having capital access, is you got to be able to tell the business story. What are your business models? How do they behave? How are you generating revenue through those? How are you acquiring clients? What are your margins on each of the offers and services? Have you thought about increasing your prices? These are things that investors are looking for before they hand you their money to make sure they're going to get the ROI that they expect on the return on investment for the dollars that they're contributing to your company, that ideally you will grow and be able to pay back at some point down the road, right? Whatever that agreement looks like. But if you cannot speak to the financial inputs, the operational, way that you will be performing, how many employees you're going to hire when, how quickly do they get up to contributing, what is the seasonality of your business, what can, investors expect? And if you can't answer those basic questions, then capital access becomes a lot harder. And when you said about the foundation of your finances being bookkeeping and clean books, that's really where it all starts. And if you don't have a good team supporting that, or you're doing a poor job of it, or maybe you're skipping a few months because you're busy, then it's going to be really hard to help someone understand financially what's happening in your business. So bringing in some help, outsourcing that early on is going to be critical to just make sure you can even have the conversation about where you're going next.
So could you perhaps give us a bit of an example of clients that you've worked with and what they've been able to achieve by engaging with a fractional CFO?
Yeah. So in our firm, we definitely keep everything confidential for our clients. But in general, I'll speak to like some of the results being able to help our clients achieve on a regular basis. So on an ongoing year-over-year perspective, we're growing those businesses top line revenue by about 20% or higher. And that is because, again, intentional planning and, really tracking performance and making sure we're monitoring what's happening. And if we need to pivot, we're making those changes necessary. We're creating hiring plans to align to that growth that needs to happen. And we're setting, quarterly, monthly targets to ensure that we are on track to hit the goal. And if we're not, that we're also reassessing and realigning every quarter on what needs to change in order to get back on track. From a bottom line perspective, we're able to help clients shift their profitability by 5, 10, up to 15%, depending on the industry. Again, not every industry has that ability to do that. But for those that are, service-based businesses where we have a lot of area to improve on margins, we've even had clients go from negative, from a loss to a positive in 6 months. So like the work of the CFO is really to help ensure that you're growing both top and bottom line. And then ultimately, the other piece of the goals that we have worked with clients on is their owner's compensation or benefit. So sometimes I find that owners are not paying themselves enough or at all, or they're not investing for their future. So for us, it's important not just to have profit, but then use some of the profit to compensate the owner above and beyond their payroll so they can build personal wealth outside of their business and make sure that they're stashing out their nest egg from one day they want to retire, not waiting for that big exit to happen for them to sell their business in order to get to retire. But all along the way, compensating themselves every single month, every single year, to make sure that they're able to build, a comfortable retirement whenever that time comes. If, they want to move on from the business or sell it too. We want to always be sell ready and exit ready, because that means we're running a good, healthy financial business. And we do that through our standard processes and set of tools that we use to monitor financial performance, have the right conversation strategically, and really help them guide making decisions from a data-driven perspective by looking at the numbers, running the financial scenarios and analysis needed to be able to answer the questions and know what is financially viable for the business before they make a decision.
Are you a small business owner who is ready to take your professional growth to the next level? Sign up to the Grow a Small Business weekly newsletter. This is your go-to email every Friday and will take about 2 minutes to read. Join the Grow a Small Business community who, like you, are investing in their professional development. Each week, we curate valuable resources, whether it's expert advice, books, podcasts, industry insights, or actionable strategies. We've got you covered. Leave your email at growsmallbusiness.com/weekly.
Just briefly touching on exit readiness, what would you say are the most important 2 or 3 things from a financial perspective that a business owner needs to consider and have right, so that if they are tapped on the shoulder one day by someone with very deep pockets ready to buy their business, that they're ready to make it happen?
Yeah, great question. I mean, first it's going to be profit because valuations are, based on EBITDA, which is earnings before interest, taxes, depreciation, amortization, which essentially for most businesses profit, multiples of that. So that valuation is hinged upon that. So you better be laser focused on what is your profit and make sure that you're profitable enough to get a really good buyout one day, now or in the future. And that they have a plan for, what that after exit is going to look like for them. I find a lot of business owners get to this point where they exit and they're so happy and then they get depressed because they never thought, what is life after I don't own this business anymore? And it sounds like grandiose, right? You're like, oh my God, I have all this freedom, all this money, let me go travel. And then that gets all really quick. So if they don't have, something that they value, a mission in life after, they exit, they tend to just lose their way. So we want to make sure they have something ready for them to pursue after they get some risk, maybe. What's the next thing they're going to do? And then 3, we want to make sure they have a really good, financial personal plan in place for the money that they got. Like, what are they going to do with the money? Are they investing it? Are they, just put it in a bank account and just watching it sit there? And sometimes you do want to do that to start and give it some time to think and work with maybe even a financial advisor on what to do with it, how to invest it to make sure it lasts for the long term. But I just find not rushing into making decisions, when you're just emotionally charged, you just sold your business. There's a lot happening, a lot of excitement, a lot of adrenaline. Let's not make decisions from that place. Let's settle in, have a plan, or plan ahead. That even better. You can plan ahead of exit to make sure, what you would do and how you're going to manage that so you're not surprised by, having a lot of money throw in your lap all of a sudden when you're not used to it. Can be very emotional and, there's a lot of emotions running through your body, and just making good sound financial decisions with it to make sure it lasts and to the next stage or phase in your life.
Yeah. Well, I look forward to when I have to deal with that problem. Hopefully it'll turn up for me one day. So if we had to boil down today's conversation to one recommendation for our listeners, what might that recommendation be?
So, of course, I'm biased because I'm a CFO, but you have to know your numbers. You have to look at your data and you have to make decisions based on finances. Now, I'm not saying that's the only metric by which we make decisions. I think there's a huge component of the people side of things. It's both people and profit. We don't think it's one or the other. I think there's, a human aspect to everything we do for clients, for the people we work with, for the people we're taking care of that we need to also consider. But at the end of the day, you're in business to make money. So if you're not making money, we have a problem we need to solve, because not just you, but all your employees' livelihoods are dependent on you making money and being profitable to stay here long term. So you have the responsibility to manage your numbers, either if you have some help, like a fractional CFO by your side doing some of the work, or you yourself do it. It's your responsibility to make sure you know what's going on with your numbers and that they're working well so that you and everyone that depends on you can be cared for. And it's important that we're focused around that profit aspect of the business so we can be in business long term to make the impact we want to have.
Carla, if this conversation has been of interest to our listeners and they'd like to find out a bit more about you and the concept of a fractional CFO, how can they get in touch with you?
Yeah, you can check us out on our website at wealthworthwithin.com. You can book a call to talk to one of our CFOs to find out if we can be a good fit and come into your team to help support you in the way that I shared today. If you're not ready to hire a CFO, but you want to get better at your financial management in your business, make sure to sign up for our newsletter on our website too, or follow us on social media at Wealth Worth Within. We're active on Facebook, Instagram, and LinkedIn.
Awesome. Well, Carla, thanks so much for the conversation. I've got a lot of value out of that. And like you say, it's just so important for business owners to know their numbers. And it's great to know that you and your team are there to be able to support people to do that. So thank you.
Thanks for having me.
Want to help other small business owners improve their business? There's one quick thing you can do, which is jump over to iTunes and leave a review. Or if you don't have an account, follow us on Spotify.